Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 27, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. As we are getting deeper and deeper into this COVID-19 crisis, please remember to donate some money and possibly your work, uh, clothing, whatever, to those affected by the coronavirus. Probably the best thing is to do as American Red Cross or just Red Cross organization around the world, and just help your neighbors. So we're in this all together. We're gonna get through this one way or another, but it's gonna take a while. And the way I'm looking at this economic data, it's gonna take a rather long while. So we saw a $2 trillion package being approved by the US Senate, signed by the president. Not sure exactly how much it will resolve, but we will look at the stocks and we'll try to judge if it's actually doing anything to the stock market. Initial jobless claims just skyrocketed, and this could lead to years of recovery if previous recessions are any indication. We'll look at junk bonds. They're at resistance. Junk bonds are very important because they correlate highly to the stock market. So we'll see if this is it, or if the junk bonds will continue higher. If they continue higher, we could see a new bull run begin, and I have no problem with buying stocks once the bullish market has restarted. This is all, of course, happening due to unprecedented intervention by the Federal Reserve, the Treasury, etc. They did succeed in stabilizing small short-term bonds and municipal bonds, especially, which just had a V-shaped recovery. Investment-grade corporate bonds (LQD) are also getting close to their own bullish levels. We look at dollars that pulled back sharply from multi-year highs, and it could again approach and get back to the bearish levels. This is helping gold. I actually have a position in gold. And finally, we'll revisit our Binance cryptocurrency robot, which is trading, and it is making 20%, made 20% in 3 months. So do sign up at MasterCharts Trading when, anytime basically, and then we can help you with the robot and the investment. Okay, so let's look at S&P 500 first. Um, So there is the rally, beginning of the rally. Um, this up purple arrow actually, I put it in real time during, for my subscribers at MasterCharts Trading because I kind of thought that this was it. I actually thought that this was it maybe a few days ago, but misjudged a little bit. But overall, this is a close to 25, 21% rally excuse me, of the lows from the 23rd of March. And notice today, so here's where things are beginning already to um, this could be the beginning of a rollover. So let me show you what I mean. So first of all, you can see on this chart there are four horizontal lines, the green, blue, red, and yellow lines. So these lines are my proprietary trading indicators. They're called MasterCharts Trading Price Action Indicators, and these are available for your use on TradingView.com. So TradingView.com is the graphing interface. It's free. You don't have to sign up paid account at TradingView.com. You do have to sign up at MasterCharts Trading, and once you do sign up at MasterCharts Trading, I will open the door for you. All you need to do is just send me your user ID for TradingView. So you can see that today we had a high of 2634.5 and the red line is at 2632.81. So this is a to me, this is already a signal to short. I'm not gonna short, anything basically right now, nor am I recommending or sending any alerts to my subscribers. Uh, but there are people who are okay with trading both on the downside and on the upside. So now is basically right there. So this is the trigger. I mean, if I was trading it on the downside, I would be shorting right now. Could I be wrong? Absolutely, because you can see the bullish levels are actually not that far off. Bullish levels are 2938. So we could still see a run higher and we could break out. So it's not that far, 16% run. So if we see a close above 2938, then I think the new bull market would have started. You can actually see the same thing on Dow Jones Industrial Average chart. There's the Dow Jones Industrial Average. Again, it is currently, you can see it is at the resistance level. You can see the resistance at 22471. I'm reading it off the chart. This is just a number that my indicators provide. Again, you can find out more about it at MasterCharts Trading. So if I was trading it, if I was shorting it, I would be shorting it right this instant. However, again, the bullish levels are actually not that far off. And where do we need to get to the bullish levels? About 16%. So bullish levels are at 25310. If we see a close above that, we're back in the bull market. And then that's it. We're done with this correction. But not yet. We could still see a rollover to the downside. If that happens, then, we could easily take out this 23rd of March low. And let me get back to a couple of, economic data points. So on March 20th, the week, last week, I showed this chart, and this is projected initial unemployment claims by the Goldman Sachs. So they projected it to be somewhere in the vicinity of 22 million, 22 million 100,000 or so. Uh, in fact, the jobless claims came in at 3,200,083. So significant, enormous. I mean, this is again unprecedented in the history of record keeping, at least from the 1960s. I don't exactly know where it was during the Great Depression in the 1920s and 30s. I will need to look this up, but this is very high. So if previous recessions are any indication, so here is that Great Recession where I'm hovering in 2009, 2010 or so. You can see how long it took to get back to more or less normal, to more or less normal. It took like 5 to 7 years to get back to normal, right? So think about this. Um, what's going to happen in 5 to 7 years? So if this is any indication, then we could see like a little bit of a decline, right? Unless there's going to be some major action from the federal government. And I'm thinking about infrastructure projects. I think there could be just huge infrastructure projects that um, would possibly conscript some of the, population, United States population into building those reconstruction projects. So if that is the case, then we'll see a decline in unemployment much faster. But as of right now, if we change nothing, we could easily see, 10, 20 years of recovery after this. And we're not even, I don't think we're at the top. I think we're going to see higher spike, even higher. So 20 to 30% unemployment in the next few years would not be unreasonable to predict. Unfortunately, this is, if nothing happens, I think this is going to be something of that nature. Okay, so again, initial jobless claims point to many months, if not years, of recovery. So let's get back to the stock market. Again, I'm not a economist, or I'm not a fundamental analyst. I look at the charts most of the time. The chart damage has been done. Um, there is a recovery. Again, not that far off from bullish levels. So it is possible that we're going to just continue higher despite this whole huge unemployment. It's also possible. Here's QQQ, the Nasdaq, a bit weaker than S&P actually, but also not too bad, for Nasdaq to get to the bullish levels. Another 13%, not that far off. So let's wait and see. I mean, anything is possible, seriously. But the way I'm reading this chart right now, I would definitely not be buying it just yet. Here's the Dow Jones again. IWM, the small caps are still underperforming. So this is showing that small businesses are suffering even more than large businesses. The bailout will come um, to the large businesses much faster than to the small ones. You can see the large businesses, the Dow Jones already at the red line, at the resistance level right there where I'm hovering, while IWM, the small caps are not even haven't even gotten to the resistance level. So again, you can find out more about these indicators. They predict the price action very well. Uh, this is the only thing I use in my trading. I only look at the indicators basically. You can trade on any time frame. So for example, if you really feel like trading on 30-second time frame, and I do it occasionally, you can do it as well. So for example, right there where I'm hovering, you could have shorted it at 30-second time frame. All right, so small caps are lagging. Junk bonds. So junk bonds, until very recently, they were doing just fine. Um, I pointed this out a few weeks ago. This yellow arrow here on the 25th of February was where I would have exited my old position if I had any. I had no position, so I had nothing to exit. But I did send this to my subscribers at MasterCharts Trading, and hopefully they were able to exit. So after that, you can see just collapse. So right this instant, we're again at this resistance level. Junk bonds were able to overcome it right now. You can see there was a close above this resistance level. So not that far off again from the bullish levels. And anything is possible. It's only 6% away from the bullish level. So yeah, it's possible that we're going to see a V-shaped recovery for stocks. Stock market possibly will decouple from the quote unquote real economy. In the real economy we got that, but in the stock market world we are seeing a recovery. Go figure. uh, for now I would just say that let's keep an open mind, and if junk bonds continue higher, if they close about basically 100, then maybe maybe they were able to stem the bleeding. Maybe they were able to stop this. Treasury is also looking okay. Uh, Possibly new highs for treasuries. So yeah, let's just wait and see what happens. So like for me right this instant, I just want to kind of stay out of the markets. And in fact, I actually have basically nothing. I bought some gold recently, and I'll show you my trade for gold. But other than that, I have no stocks, I have no bonds. Just don't really want to trade right now because of this volatility. So here's the or rather short-term short-term bond fund BSV, and this is clearly a V-shaped recovery. So following the recent bailout, you can see a huge rally for short-term bonds, And they're back in the bull market. There's that breakout right there on the 24th of March. Yeah, now from now on, looks like BSV will be in the bull market again. So go figure. LQD, which is investment grade corporates, also bottomed here on the 19th of March and then rallied pretty strongly. Right now we're approaching basically bullish levels at 123.44. If we see a close above them, then investment grade corporates again are also in a bull market or going to be in a bull market. Right this instant, they're still kind of in between and it's still possible they're going to continue lower. But there is an expression called says don't fight the Fed. So if the Fed is printing money, then you should be on the side of the Fed. In that case, the stock market and the various lower grade bonds should continue higher from here. Municipal bonds, there's what I'm talking about. There's that breakout. Again, V-shaped recovery. There's the breakout 26th of March rather. There's a close above the blue line. Again, you can find out more about this indicators at MasterCharts Trading. But right now, municipal bonds, seem to be in the bull market yet again. I don't exactly know if this is, like a normal thing. It's clearly not normal, but it is what it is. And, if you're interested in, buying municipal bonds, then you would not be wrong to be buying them. I don't know if that makes any sense. But me personally, I just don't really want to do anything with stocks or bonds right this instant. So dollar index, DXY, it wasn't a nice run right there on 13th of March is the breakout. Huge run higher, multi-year highs. Now a very sharp pullback. So this sharp pullback is taking the index, the dollar index, towards the bearish levels. The bearish levels are currently at 97.78. If that level gives, we could see a nice move lower on the dollar. By extension, the euro versus US dollar. So right there on the 17th of March, I thought we were having a breakdown. In fact, this was a successful trade. Would have been a successful trade. Uh, I did send an alert. There's the red arrow down. So if you're trading Forex, you could have opened right there on the 17th of March and gained a very nice, let me see, around 368 pips if you exit at the very bottom. Uh, but now, once again, we're approaching bullish levels, and bullish levels for euro versus US dollar is 1.117 right there where I'm hovering. So go figure. This makes more sense to me because Federal Reserve is basically devaluing the dollar, so euro is getting more expensive, I suppose, by comparison. All of this is having positive effects on gold. There's the XAU USD alert gold. I actually myself bought GLD. I should have bought, calls, but I just bought the actual underlying, the actual GLD. If I bought calls here, this is if you trade options, this would have been like 100%, at least 100% move, possibly more. But overall, gold looks good. GLD, I have a position open, so I already took profits, but it seems like it wants to continue higher and possibly break to new records, to new multi-year records, not all-time records. Silver also is interesting. Here is XAGUSD. So big breakdown right there on 12th of March. Avoid basically means if I had a position, if I had a long position, if I bought gold, for example, right there I'm sorry, silver on the 30th of January, where alert was sent right there, then I would have exited right there on the 12th of March. But also, not only I would have exited, I would have shorted it here. I didn't, but I sent, this is a mention to my subscribers. Big drop afterwards too. And now notice where the bounce back is taking it. It's taking it, the price is exactly at the support resistance level at the red line right there where I'm hovering. So I think gold, if gold continues higher, silver should follow. I mean, I don't see a big reason for silver not to follow the gold higher. All right, so let me see if I missed anything. And oh yes, the robots. So of course, let me show you the results. And here they are. Again, I just pulled this chart. This is a March 27th at 6 p.m. So right now it's 7 p.m. here in California, and we are on lockdown, by the way. So I am, recording uh, during the lockdown, and it's getting worse. The lockdown is getting worse. So besides the point, but here's the trading of the robot. So we started. This is an actual return on investment. So we started the robot started trading on its own, and it's trading five cryptocurrencies. It's trading Bitcoin, Ethereum, and Binance Coin, and also a couple of more pairs the Binance Coin to the Bitcoin and Ethereum to Bitcoin. So there are five different crypto pairs. And overall, there were about 70 trades already since the inception here at the end of December. About 3 months, we're about 20% up. So overall, I am just super happy about the performance of the trading robot, and we're getting ready. In fact, you should already be signing up because we are going to start accepting money uh, pretty soon. In fact, I think we're already starting to accept money. So this is algo trading interest list, algorithmic trading interest list. Sign up here at MasterChartsTrading.com, and hopefully, we will start accepting money, and then you will be able to get similar gains. And this is not just the consistency. The drawdown was about 5% here in January, and here in beginning of March, also about 5% drawdown. So overall, just beautiful, I think. Um, if this continues, then over the course of a year, we could easily see somewhere in the vicinity 60 to 80 to 100% profit. And consistent profit of this size is actually quite rare. So what I would urge you to do is right now go to MasterChess Trading, sign up for the interest list, enter your email here. We'll contact you as soon as it's available. Uh, for now, I still have three services that are available. That is alerts, trading indicators, and both alerts and trading indicators. This will change. Most likely, the alerts will become what I call signals. The signals will have improved interface, and you should be able to get your own alerts about your own securities. In other words, I cover certain securities, but if you want to get alerts on your own securities, then you should be able to get them as well. So uh, this is going to be significantly improved um, as the time goes on. I think within the next few months. Trading indicators are still going to be available. Uh, I'm not going to discontinue them. So the prices are actually very reasonable. You can make tons of money with a subscription of $29.95 per month, or even less if you are buying yearly. And of course, the best deal is to get both alerts and indicators that Not only you get the trade on your own, and I'm talking about trading indicators, these four lines in the chart, the green, blue, red, and yellow lines. So once again, if you want to trade on, you know, 1 minute chart, you can, or 5 minute chart. Let me see. It's pretty much, any time frame, really. Any time frame. You can trade, for example, there was a good opportunity right there. So really any time frame you can use my indicators on any time frame, and the only thing that I would caution against is using my indicators to trade intraday stocks. Uh, that one is not as clear cut. So on daily charts, no problem. Like for example, I don't know, Disney. You could be buying. See right there the actual alerts during the bull market. No problem. We can be buying, buying, buying. During the bear market, if you are so inclined, you could short. So for this particular security, Disney, again, I'm not shorting it or anything of that nature. I'm just showing you how the indicators are used and how um, people on Wall Street think. So there's the opportunity already to short. And this would have been probably a successful trade, especially if you are using options, because a movement of just a little bit like this much will produce a huge move on the option itself. Anyways, I ramble. So once again, please head over to MasterCharts Trading and sign up. But most importantly, continue to observe what the government is telling you about social distancing. Uh, I know it's difficult for some people, but there are many, many, many opportunities to quote unquote entertain yourself. One of the best things to do is to pick up a habit of things like yoga and meditation. I do yoga and meditation almost every day, and I would highly recommend it to anybody who's experiencing stress right now due to this shutdowns and unemployment, etc. So don't forget again to donate some money, donate some of your time, donate some of the supplies, and help your neighbors. All right, thanks for listening, and have another great trading week. Bye bye.